Hello everyone, welcome to Commerce Guide. This is Pranali. In today's video, we'll be discussing how to apply the modern rules of accounting in the journal entries. So in our previous video, we have discussed the modern rules of accounting. I have explained all the types of accounts, meaning of it, and the rules behind it. So to watch that video, link is being given in the description box below. You can watch it. So in today's video, we'll be seeing how to apply these modern rules in the journal entries. So first, let me give you a quick recap on the types of accounts and the rules behind it. So here accounts have been classified into six types: assets account, drawings account, expense account, liabilities account, income account, and capital account. So these six types of accounts we will divide it into two groups. Okay, first group we have asset, drawings, and expenses, and in a second group we have liabilities, income, and capital. Okay, so these are the two groups. Now we'll see how to apply these rules. Now this first group, which has assets, drawings, and expenses, they have a debit balance. They have a debit balance. And the second group, which is liabilities, income, and capital, they have a credit balance. Okay. So this first group, which have a debit balance, that is assets, drawings, and expenses, when they increases, now when these types of account increases, we are going to debit these accounts. Okay, and when they are decreasing, we are going to credit that account. Okay, so it is fully opposite in the second group. Here in second group we have liabilities, income, and capital. They have a credit balance, and if this account increases, we will credit that account, and if they decrease, we will debit the account. Fine. So now what is this increase and decrease? Let me give you a simple example. Now see, we'll take assets. Okay, now see, if we purchase the assets, if you purchase the assets, assets are increasing in the company because assets are coming into the business. So to record the assets, we are going to debit that asset account. Fine. In now see, I'll give you another example that if we sell the assets, okay, if we sell the assets, assets are decreasing in the company because assets are going out. So in that time, what we will do, we will, for the to record that decrease of the asset, we are going to credit that asset account. Fine. So this is how we should apply this rule in all these accounts. So we'll see with the few examples. Now, see, this is the first account, that is asset account. We'll see the rule behind it. So for increase, we should debit. For decrease, we should credit. Now we'll see an example. Purchase furniture for rupees 10,000. Okay, so they are purchasing the furniture for rupees 10,000. They are purchasing the furniture and they're giving in return the cash. So we will see that which two accounts gets affected here. Okay, this is our first step. Now see, the two accounts which gets affected here are purchase furniture. So they are purchasing the furniture. So your furniture account gets affected. Your furniture account gets affected first. Okay, and they are purchasing the furniture for cash. They are paying rupees 10,000. So your cash account gets affected. Fine. So our second step is what? We should see that which account is it. Okay, now furniture is which account? It is a asset, so it comes into the asset account. Fine. Now what is the cash? Even cash is a asset to the company, so here asset rule is being applied. So both are the assets here, furniture and cash. Fine. Now we'll see that which account is being debited and which account is being credited. Now see, the furniture or the asset. Now here furniture we are purchasing. So when we are purchasing the furniture, so furniture is increasing in the business. So to record this increase, we are going to debit the furniture account. We are going to debit the furniture account. Fine. Now next, cash. Cash is decreasing in the company because when we purchase the furniture, in return we give the cash. So cash is going out of the company, that is cash is decreasing. So to record the decrease transaction, we are going to credit the cash account. We are going to credit the cash account. So what will be the journal entry here? Furniture account debit to cash account. Rupees 10,000. Fine. So this will be the journal entry for this. Okay, now let's see the second rule here. That is drawings account. Fine. So drawings account rule says that for increased debit, for decrease it is credit. Okay, now here we'll see an example. Withdrawn cash from the business for personal use. Okay, they are withdrawing the cash from the business for personal use. Personal use means what? They are known as drawings. Okay. Now see, the money invested into the business is known as what? Capital. And from that capital, we are withdrawing the money for our personal use. That money is known as what? Drawings. So here, first account which gets affected is what? Drawings account. Okay. And the second account which gets affected is what? Cash account, because we are withdrawing the money in the form of cash. So here, cash account gets affected. Fine. Now we'll see what are these drawings. Now drawings are what? Which account gets affected here? Drawings account. Here drawings rule will get affected. So here drawings rule will get affected. And what is cash here? Cash is a asset. Cash is a asset. So here asset rule will be applied. Fine. Now we'll see that the withdrawn cash from the business for personal use, that is drawings. So drawings account will be debited because here drawings are increasing because the money is being withdrawn from the business. So drawings are increasing. So when the drawings are increasing, which rule is applied here? For increase in drawings, we are going to debit the drawings account. We are going to debit the drawings account. Fine. And we are withdrawing the cash, means we are withdrawing the cash for the personal use. Now this cash is a asset. Fine. So what asset rule says that? Asset rule says that if it increases, we should debit it. Fine. So here cash is what? Increasing or decreasing? Here cash is decreasing because cash is going out of the company. Now see there, here we should see from the point of view of the business. Okay, from the point of view of the business. Now from the point of view of the business, money is going out, right? Money is going out from the business. So when the money is going out from the business, what it is? Money is decreasing. So when the cash is decreasing, what we are going to do? We are going to credit the cash account. So your entry will be drawings account debit to cash account rupees 5,000. Fine. Now we'll see the third type of account, that is expense account. So what our expense rule says, that same increase for debit, and for decrease we will credit it. Fine. So let's see an example here. Salary paid to employees rupees 15,000. So they are paying the salary to the employees rupees 15,000. So what is salary paid here? What is the salary? Salary is an expense to the company because they are paying the salary, right? So money is what? Going out of the business. They're paying it. So first account which gets affected here is salary account. Okay, and they're paying the salary in the form of cash. So second account which gets affected is what? Cash account. Fine. So now we'll see that which type of account it is. Okay, now salary is what? It is an expense account. It will affect the expense account because salary paid is what? It's an expense. So here expense rule gets affected. And what is cash here? Cash is a asset to the company, right? So here asset rule gets affected. Now what our salary says here? Salary paid to the employees. Now what is salary here? Salary is an expense. Now salary is increasing, the expenses are increasing, right? So when the expenses are increasing, we will debit the expense account. Fine. So your salary account will be what? Debited. Okay. Now cash. Salary paid to employees rupees 15,000. So 15,000 is what? Going out of the company means what? Cash is decreasing. Okay, when cash is decreasing, what our asset rule says that when the cash is decreasing, we are going to credit that account. Fine. So what will be the entry here? Salary account debit to cash account rupees 15,000. Fine. So this is the simple way to apply the rules here. Fine. Now we'll see the fourth entry. Now here liabilities account. So liabilities rule is what? For increase we will credit here. For decrease, we will debit. Okay, now the first group we have completed. Now the second group, liabilities, income and capital. Here we for increasing we will credit the account, for decreasing we will debit the account. Okay, so we'll see an example here. Purchased furniture for rupees 20,000 from Abhay on credit. So what they're doing is here, they are purchasing the furniture from Abhay on credit. So they are not purchasing the business. So they are not purchasing the furniture on the cash basis. They are purchasing the furniture on the credit basis. It means what? They are purchasing the furniture, but they are not paying the money to Abhay. Okay, money is not being paid to Abhay. Okay, so if the money is not paid to a person, this person is known as who? This person is known as creditor. This person is known as a creditor. So creditor means what? It's a liability. Creditor is what? A liability. Fine. So see, the two accounts which gets affected here are, first is what? Furniture account, because they are purchasing the furniture. So furniture account. And second account which gets affected here is what? Abhay's account. Second account is what? Abhay's account, because he's a creditor here. Okay, they are purchasing the furniture on the credit basis, means still the amount is being payable to him. So when the amount is being payable to certain person, that person is known as who? He is known as the creditor of the business. Okay, so we'll see what is furniture here. Furniture means what? The asset account is applied here. Okay, now Abhay is who? He is a creditor. So creditor means what? The liability rule is been applied. Creditor means the liability rule is been applied. Now let's see furniture is a asset. So for asset, what is the rule? If the asset are increasing, we will debit it. When they are decreasing, we will credit it. So when we are purchasing the furniture, furniture is increasing in the business. So when the furniture is increasing, we are going to debit the furniture account. We are going to debit the furniture account. And next, Abhay. Abhay is what? A creditor. So here our liability is increasing. Okay, here our liability is increasing because still the money is not paid to him. He is under the liability. So here liability is increasing. So when the liability is increasing, we are going to credit the liability account. Okay, we are going to credit this. So what will be the entry here? Furniture account debit to Abhay account. Rupees 20,000. Fine. So this is the liability rule. Now we'll see the fifth type of account, that is what? Income. Income account. So for income rule is what? If this account increases, we will credit it. If it decreases, we will debit it. So we'll see an example here. Sold goods worth rupees 25,000, means they are selling the goods. Okay, they are selling their goods, and in return they are receiving what? Cash. So here two accounts which gets affected here are, they are selling the goods, so sales account gets affected, and they are receiving the amount in the form of cash. So here cash account gets affected. Fine. So now what is sales here? Sales, when we sell the goods, it's an income to the company. Okay, so here income rule is being applied. And what is cash here? Cash is a asset. So here asset rule gets affected. Fine. So now see here sales. When we are selling the goods, it's an income to the company. Okay, it's an income to the company. So what are sales happening here? Sales are been increasing. Okay, sales are increasing. So we will credit the sales account. So we will credit the sales account because we're selling the business, sales are happening, sales are increasing in the company. So we will credit it. Now, what is cash happening here? When we are selling the goods, we are receiving the cash. So cash is increasing in the company. Okay, cash is increasing. So when an asset is increasing, we will debit the asset account. Okay, asset account rule says that if it increases, we will debit. So what will be the entry here? Cash account debit to sales account rupees 25,000. Fine. So we'll see a sixth account, that is what capital account. Now what our capital account rule says that for increase we will credit, for decrease we will debit, right? So they have told the example here that started business with cash of rupees 5 lakh. So see, they have started business. Okay, when a person starts a business, that is known as what? Capital. Means when a person starts a business with investing something into the business, okay, that is known as what? Capital, with a cash of rupees 5 lakh. Okay, so they are investing the money into the business of rupees 5 lakh. So here two accounts which gets affected are capital account, because they are starting the business by investing some money into the business, that is known as what? Capital. And they are investing the money in the form of cash. So your second account which gets affected is what? Cash account. Fine. Now see, what is capital here? Capital, here capital rule is applied, and in cash asset rule is applied. Cash is the asset, so here asset rule is applied. Now what is capital happening here? See here. Now they have started the business with cash of rupees 5 lakhs. So now capital is increasing in the business. Capital is increasing because money is coming into the business. Capital is increasing. So when the capital is increasing, we are going to credit the capital account. Okay, and second is what? Cash. Now cash account is what? See, cash is coming into the business. So here also what is happening? Cash is increasing. Means what? Asset is increasing. So to record the increase in the asset, we are going to debit the asset account, because the asset rule says that for increase we are going to debit it. So asset account will be debited and capital account will be credited. Fine. So entry will be cash account debit to capital account rupees 5 lakh. Fine. So these were the rules, how we applied it into the journal entries. Fine. So that's it for today's video. Hope you liked this video. Please don't forget to like, share and subscribe to my channel. Thank you.